Tell us your rationale for saying no to this bill.
Yeah, it's pretty easy. Number one, a bill named the Inflation Reduction Act that does not reduce inflation, according to the CBO, according to Bernie Sanders, according to myself, should tell everyone that first be very curious about what's actually in the bill. Number two, I would say that when you're going to spend $80 billion of the money raised for the IRS, which will make the IRS bigger than 4 major departments in the government, that's probably bad news for the average American. According to the Congressional Budget Office, 90% of the revenues generated by the IRS will come from people making under $200,000. The tax credits in the bill go to people making up to $300,000 plus. So people making under $200,000 will be paying for tax credits for people making over $300,000. That's the wrong direction for any piece of legislation. And you look at the actual tax increases. As a small business owner in a past life, so to speak, I can tell you that when your taxes go up, those are headwinds for wages increasing for your employees, as well as benefits getting better for those same employees. So this is bad news for our economy.
But let's go through a couple of these things. And I think there's no question, I think on this program, on this network, I think we've all decided that the Inflation Reduction Act, the name the proof will be in the pudding if the name turns out to be right. But that there are numbers that put that into question. But I would ask, there are things in this bill that would help some of your constituents. Medicare recipients with prescription drug coverage wouldn't have to pay about $2,000 annually for medications. That would be deflationary and would be a help to your own constituents, no?
Well, there's no doubt that when you cap expenses in some place, that's a good thing for those who receive it. You're going to actually increase expenses somewhere else because the $100 billion that it will cap out at is going to be paid for by a loss of research and development for our pharmaceutical companies, which means that you'll have to wait longer for new drugs to come to the market. But there's no doubt that for the person receiving the benefit, it's good news. The question is, what's the price of that good news? And we don't have that discussion very often, and certainly we have not had that discussion so far. One of the things I write about in my book, America, a Redemption Story, is the importance of understanding those living in poverty and what they face. When we have that conversation holistically, I think we're in better shape. When we just ask for something up front and not understand the long-term cost on the back end, sometimes we make bad decisions. That's one of the reasons why you hear so many alarm bells going off as it relates to the reconciliation package.
Senator, I want to talk to you about the IRS because you raised it. And you've been someone who's talked a lot about the importance of law and order and enforcing law and order. And the reason I ask or I raise it in that context is in the world of taxes in America, there has not been a lot of enforcement going on across the board. I mean, I think no matter how you look at it empirically, the IRS has been gutted. The chances of getting audited today are very slim. And as a result, we have a lot of people clearly cheating the system who should be paying in. And so rather than actually raising taxes, we, I think, arguably should be finding a way to enforce it. Why are you against that?
Andrew, I'm actually not against that, number one. I'll ask your viewers if they want the IRS coming searching through their accounts for more information about what they're doing.
Senator, nobody wants that, but at some point we have to enforce the laws. How do we do it?
This is your show, but at the end of the day, I'm going to finish my point. My point is simply this, that, in fact, if you want the IRS coming to focus on small business owners, according to the CBO, 90% of the revenue generated by the new IRS agents, 87,000 of them, will be focused on people making $200,000 or less. Let's not pretend that this is something that it's not. What President Biden and the Democrats said this bill would do is focus on millionaires and billionaires. That is patently false, according to the nonpartisan Congressional Budget Office. It's one of the reasons why, as you read through my book, America, a Redemption Story, I talk about the necessity of fairness. This bill will be negatively received and negative impacts on the poorest Americans, middle-income Americans. The job creators in our country will see headwinds that they do not have today, and that's already in an economy with 9% inflation and only a 5% wage growth, which means that you have less money in your pocket because of the government.
So, look, I think we all want fairness. The question is, if there's some people that are cheating the system, how would you otherwise enforce it? Is the issue the amount of money that's being given to the IRS? Would you give the IRS any new money?
Actually, when we were in the majority, we did give the IRS more money without any question. So the question is not whether or not the IRS needs more money. The question is, do they need 600% more money? And the answer is no. Anyone who suggests that the IRS needs an $80 billion increase to be able to do their jobs, they're just living in an alternate universe. And that's not something that the average person in our country believes to be the case. It's certainly not something that I would ever support. We need a government that is responsive to the needs of the citizenry, not one that attacks the American people with more resources and regulatory burdens placed on small businesses. It's one of the things that I find reprehensible about the current approach to finding the revenue generation necessary to pass, I guess, the climate part of their bill, because frankly, the inflation part of the bill was caused by more spending, and now they're going to spend more.
Shepard Smith here. Thanks for watching CNBC on YouTube.